Charlie, I mean, I want to ask you this question. I had a number of emails and questions on, especially on in the comment section on my videos, and people ask me, Alessio, why is it that when the dumb money, when the majority of people are heavily short or heavily bearish on the market, why is it that that's a contrarian signal? Because I think these questions were asked mostly by newer traders, maybe newbies who don't understand the contrarian outlook. Can you explain quickly, if you can, why it is that especially for folks out there who don't understand this contrarian outlook, why is it that when everybody gets heavily against, like for example Bitcoin, like we're heavily against Bitcoin recently, this is the last COT report, the last Commitment Traders report, when the majority of non-commercials were heavily short, net short on Bitcoin.
Okay, there's two things to take here. One is, if everybody's short, or if the majority of people are short on a market, who's left to carry on shorting it, to carry on pushing the price lower?
Exactly.
So if everyone's already short, or a large majority are already short, then it doesn't take much buying or short covering to start to turn the scales, tip the scales back in the favor of whatever market is going back up again. So that's the first point there. So if you've got a large majority are either short or long, then it means that they're already on board on that particular move.
Yeah.
So if everyone is already short, then we need new money to come in and sell it again to keep pushing whatever that market is lower, in this case Bitcoin. So if there's no new money or no new short positions coming in to carry on pushing price down,
that's right,
then it doesn't take very much buying, or it could be that some people who are short, they start to cover their short positions. And when you cover your short positions, that is buying, because you short first and you buy it back. So what happens is that then means that there's a lot of pent-up potential demand to turn the market the other way. The other thing is that when the majority are in a long or short position, why is it that we shouldn't just be doing what they're doing? Well, one is, what you have to bear in mind is most traders around the world are not educated at trading very well.
That's right.
Most people who are trading the markets trade on emotions. They watch the financial TV programs.
Yes.
Oh, some analyst has told me to go and buy gold or sell gold or whatever.
That's right.
So most of them are uneducated, and so they trade based on emotions. And humans are based the big two emotions that we all feel in the markets are fear and greed. So people get fearful when a market goes down and get greedy when it goes up and all that sort of stuff. So,
and of course, it's not called
most
FOMO.
traders are not,
sorry, go on.
Sorry?
It's not called FOMO, fear of missing out, as well, which drove a lot of people to buy at these highs. Yeah. Sorry, you were saying,
So that's why we don't listen to what, in many regards, we don't want to do the same thing as what the majority are doing, because usually they're basing their decisions on emotions rather than on calm, collected technical analysis and thorough analysis. So those are the main reasons why we don't follow what the crowd are doing, because the crowd are usually
on the
wrong for those reasons.
Yeah, I mean, basically, just to let everyone know, when Bitcoin was down here at these low levels, near the 6,000s, I just was thinking, hang on a second here. Not everybody can be correct. Just about everybody on social media, on the news, everywhere was saying extremely bearish, calling for 3,000, 5,000 on Bitcoin. And I said, this doesn't make sense, because the crowd are usually on the wrong side, as you were saying. And when I looked at this, when I looked at the non-commercial, I said, this has got to be wrong. These guys are going to get, these guys are going to get hosed. They're going to get slaughtered. And as you were saying, when Bitcoin started to go back up, these short sellers, the only way, basically what happened is, as Bitcoin was going up, their short positions went into loss. They're going into a losing position because they're betting against Bitcoin. So when Bitcoin was going above these levels, it was taking out their stops. It was taking out their stop losses. And for folks who may not be aware of this, the only way a short seller can close his position is by doing the opposite of a sell. In other words, to do a buy order. If you can just comment on that, Charlie. So about closing a short position, that creates essentially the buying momentum or short squeeze, essentially.
Yeah, exactly. Yeah. So as people start to come out, people either taking profits off of their short positions,
Yeah.
so therefore they're buying those short positions back and banking their profits, and then what tends to happen is even as the market starts to come up, as you've just said,
Yeah.
you'll get the other people who then quickly going underwater. And the short squeeze that you're seeing there, that big up move we've had in Bitcoin, will be a lot of people panicking out of their short positions. There'll be people panicking out of their shorts, and there'll be people panicking into getting long as well. But most certainly, yes, that will be happening. And as they come out of shorts, then you are effectively buying when you're closing the sell or a trade. So that's adding fuel to the rally.
And I will just say this, guys. This explains why we human beings are biologically programmed to be the world's worst investors and traders. That's biologically, we're terrible investors and traders, because what we do is we follow the herd. When Bitcoin is going massively higher, when it's becoming like a bubble, when it's extremely high at these 20,000 levels, instead of doing the opposite, people are going, hey, with the herd, we're going to buy at these highs. And at these levels, they're doing the exact opposite. Instead of looking for buying opportunities, they're looking for shorting opportunities, which explains why human beings biologically are incapable of buying low and selling high. And instead, most people do the opposite. Most people do the exact opposite of that, and they buy high and they sell low.